A thin veil of fog rolls over Toronto's skyline, the CN Tower rising like a silent witness to a story no one expected to unfold. For decades, Canada was seen as the world's quiet economic powerhouse, stable, predictable, and effortlessly strong. Yet beneath the calm surface, cracks were widening. Investment was slowing. Productivity was slipping. And the country that once felt insulated from global turbulence was beginning to feel its foundations shake. For millions of Canadians, this shift wasn't just economic. It felt personal, like watching a trusted home slowly lose its warmth. According to the OECD, Canada's productivity growth has been near the bottom of the G7 for over 20 years, a stagnation that quietly eroded its competitive edge. But this wasn't a sudden collapse. It was a slow, nearly invisible decline, one that most people didn't notice until it touched their own lives. Families began feeling squeezed as wages failed to keep pace with rising costs. Young people questioned whether opportunity still lived within their borders. Many Canadians whispered a quiet fear. Are we falling behind? And we don't even realize it. By 2023, the IMF reported that Canada's GDP per capita had slipped below the G7 average, a symbolic marker that the country once known for outperforming expectations was now struggling to maintain them. The numbers were clear, but the reasons behind them were not. Buried under decades of policies, missed chances, and shifting global tides. Canada hadn't crashed, it had drifted. Slowly, softly, almost politely. But now, the consequences were becoming impossible to ignore. And just when the world thought Canada's stability was unshakable, a far more unsettling question emerged. What exactly caused this quiet fall from financial power? A soft morning light glints off a Vancouver condo balcony, its glass rail trembling under the weight of expectation. Canada's economic heartbeat began to skip when its real estate market ballooned beyond all reason. Homes weren't just places to live anymore. They had become the very engine of the national economy. In cities like Toronto and Vancouver, average house prices surged to 10 times the average local income, according to Global News. Global News, what once seemed like a protected store of wealth, turned into a delicate domino, tilting under its own value. For countless Canadians, buying a home felt less like a dream and more like chasing shadows. This obsession with property wasn't without peril. Canadian households piled up debt at an alarming rate. By 2018, their debt equaled 96% of GDP, per the IMF. IMF plus one, that debt was not abstract. It was mortgage after mortgage, high-risk credit, all tethered to real estate as the ultimate collateral. Behind the polished facades and soaring towers, many families wondered if they were building bubbles rather than homes. Meanwhile, affordability cracked under the pressure. The OECD reports that housing costs grew much faster than real disposable incomes, especially during the pandemic, widening a gulf that left low-income households struggling to pay more than 40% of their income on rent or mortgages. OECD, in a system once viewed as stable and polite, people now felt trapped, burdened by payments they never truly believed they'd have to make. And yet, as Canada leaned on its housing sector, a silent reckoning gathered strength. A reckoning that would soon force the country to question whether its soaring towers were a blessing or an unseen curse. According to the World Bank, natural resources account for roughly 10% of Canada's GDP, a proportion far higher than most advanced economies. When oil prices collapsed in 2014, Canada's energy investment dropped by more than 30%, triggering layoffs, stalled projects, and a shockwave that rippled through the national economy. In those moments, families in resource-dependent towns felt abandoned by forces far beyond their control. A cold wind sweeps across the Alberta oil sands, carrying the distant rumble of machinery fading into the vast, open horizon. For generations, Canada's prosperity was tied to the land beneath its feet. Oil in the west, lumber in the north, minerals embedded deep within ancient rock. These resources powered cities, funded social programs, and shaped the country's global identity. Yet this strength came with a hidden weakness. an economy that rose and fell not with innovation or productivity, but with the unpredictable pulse of global commodity prices. For many Canadians working in these sectors, every price crash felt like the ground giving way beneath their livelihoods. Lumber and mining were no different. The OECD notes that volatility in global demand has repeatedly strained these industries, leaving Canada vulnerable to external market swings that it cannot influence. Each downturn cut deeper than the last, exposing how little the country diversified while the world moved toward technology and high-value innovation. Workers waited, hoping each slump was temporary. Yet each recovery seemed weaker, slower, more fragile. Canada wasn't just exporting resources. It was exporting its economic destiny, placing it in the hands of markets thousands of miles away. And as those markets shifted, the country's financial power began slipping quietly through its fingers. Now the question looms: what happened when Canada tried to replace this shrinking strength with something new and failed? Rain streaks down the glass facade of a Toronto office tower, reflecting empty streets below where ambition once thrived. For decades, Canada was seen as a safe haven for global capital, a place where stability, rule of law, and natural resources promised reliable returns. But over time, cracks appeared. High corporate taxes, complex regulations, and slow bureaucratic approvals began to frustrate investors. Projects stalled for years. Opportunities evaporated as international capital looked elsewhere. For Canadian entrepreneurs and workers, it felt like watching doors close slowly on the future they had worked so hard to build. According to the OECD, Canada's foreign direct investment inflows as a share of GDP have lagged behind the United States and several Asian economies, a decline driven by regulatory complexity and rising costs. The numbers tell one story, but the human impact tells another. Factories left unbuilt, high-tech startups seeking greener pastures, communities left with fewer jobs and dwindling opportunity. Ambition, once nurtured by global interest, now confronted invisible barriers that no one could simply negotiate away. Even sectors where Canada had natural advantages, energy, technology, and mining, felt the chill. Global investors turned toward faster-growing markets in the U.S. and Asia, seeking efficiency and higher returns. Canada's once competitive edge was dulled by administrative inertia and policy uncertainty. By 2022, the World Bank reported that Canada had lost significant ground to peer nations in attracting high-quality foreign investment, leaving a trail of postponed infrastructure, stalled innovation, and diminished economic influence. The message was clear: Canada's financial future could no longer rely on passive stability. And as capital quietly flowed away, the nation faced a pressing question. What happens when opportunity walks out the door and no one notices until it's too late? A soft veil of kitchen clock echoes over Toronto's dimly lit suburban home. The CN Tower, stacked rising like a silent witness to a Canadian household no one quietly carried a weight that grows heavier every Canada was seen as the world's mortgages, economic powerhouse, student loans, stable and personal loans have piled up to levels few other beneath the calm surface. By 2023, the IMF reported that Canadian household debt was reached nearly 102%, and the country that once felt insulated from global turbulence was beginning to feel this isn't just numbers on a page. For millions of families juggling multiple financial obligations, wasn't just economic, wondering how to keep up personal, when wages like watching a trusted home slowly for many, its warmth. It feels like running on a treadmill that only accelerates. Canada's productivity growth has been near rising the bottom interest of the rates have sharpened for over 20 years. A small stagnation borrowing quietly now translates into hundreds of dollars. But this wasn't a sudden collapse, forcing households to choose between nearly invisible debt repayment. One that most people Canada highlighted that even a 1% rise, families began feeling squeezed debt service wages failed Canadian households by billions annually. Young people questioned whether opportunity, every loan payment lived within every overdue invoice. Many Canadians whispered weight of anxiety. Are we falling behind? Dreams delayed, and we don't even realize postponed. By 2023, financial freedom, the IMF reported that Canada's extreme reliance per capita had slipped below the G7 economic structure, a symbolic marker the nation's prosperity was known
no
for
longer
outperforming
just a product of
expectations,
production
was now struggling
or
to
innovation.
maintain them.
But
The numbers were
clear.
clear.
Canadians
Canadians
behind
lived in
them
homes
not.
financed by
Buried
optimism.
under decades
They're
of
spinning
policies,
powered by hope.
missed chances,
And yet one
and
misstep
shifting
in global
global
or
tides.
domestic finance
Canada hadn't
could send
crashed.
shockwaves
It had
through
drifted.
every household.
Slowly,
As interest
softly,
rates continue
almost
to climb,
politely.
the
But
looming
now,
question becomes
the consequences were
impossible
becoming
to ignore.
impossible
What
to
happens
ignore.
when a country's
And just when the
households can
world
no
thought
longer carry
Canada's
the weight
stability
they've
was
been asked to bear?
unshakable.
The
A
soft
far
flicker
more
of fluorescent
unsettling
lights
question
illuminates
emerged.
a crowded
What
office,
exactly
where
caused
workers
this quiet
glance at
fall from
screens,
financial
counting
power?
hours rather
A
than
soft
growth.
morning light
For
glints
years,
off a
Canadians
Vancouver
have
condo
labored
balcony.
with steady diligence.
Its glass rail,
Yet the rewards
trembling
have barely
under
kept
the
pace
weight
with the
of
rising
expectation.
cost of living.
Canada's
Real
economic
wages,
heartbeat,
the
began
money
to
left
skip
after
when
inflation,
its real estate market
have remained
ballooned
nearly
beyond
flat,
all reason.
eroding purchasing
Homes
power
weren't just places to
straining
live
household
anymore.
budgets.
They had become
It's
the
a quiet
very
frustration
engine of the
felt at
national
kitchen
economy.
tables across the
In
nation,
cities like Toronto
where
and
effort meets
Vancouver,
a stubborn
average house
ceiling,
prices
and
families
surged to
wonder
10
if
times
their work
the
will
average
ever
local
translate
income,
into real
according
progress.
to Global News.
According to the
Global
OECD,
News, what once seemed
Canada's
like a
real
protected
wage
store of
growth has
wealth
averaged
turned into
less
a
than
delicate
1%
domino,
annually
tilting
over the past
under its
decade,
own value.
falling behind
For countless
many peer
Canadians,
nations. Buying a
in the
home
G7,
felt less
this
like a dream
stagnation
has
and
ripple
more like
effects
chasing
across the
shadows.
economy.
When
This
wages
obsession
failed
with
to
property
rise,
wasn't
consumer
without
demand
peril.
weakens.
Canadian
Slowing
households
retail,
piled up
services,
debt at an
and
alarming
housing
rate.
rates. By
Workers
2018,
spend cautiously.
their debt
Businesses
equaled
see
96%
slower
of
growth,
GDP,
and the cycle
per
of
the
muted
IMF.
economic
IMF
momentum
plus one,
reinforces
that
itself.
debt was not
the emotional
abstract.
toll.
It was
is
mortgage
tangible.
after mortgage,
Young professionals
high-risk credit,
postponed
all
buying
tethered to
homes.
real estate.
Families cut
as the
back on
ultimate
experiences
collateral.
that once
Behind
defined
the
middle-class
polished
life
facades and
dreams of
soaring
upward
towers,
mobility.
many families
feel
wondered if they were
increasingly
building
out of reach.
bubbles rather
Even
than
the
homes.
ambitious begin
Meanwhile,
to feel tethered,
affordability
trapped by
cracked under
circumstances
pressure.
they cannot
The
fully
OECD
control.
reports
Combined
that
with
housing
high
costs
household
grew
debt
much
and
faster
rising
than real
costs,
disposable
stagnant
incomes,
wages have left
especially
Canada
during the
teetering
pandemic,
on a fragile
widening a
economic
gulf
that
edge.
left low-income
A nation
households
once
struggling
confident
to
in
pay
its
more than
prosperity
40% of
now
their income
faces a
on
subtle
renter mortgages.
but powerful
OECD
erosion of
in a
financial
system
vitality.
once viewed as
And as
stable
Canadians
and polite,
continue to earn
people
more
now
slowly
felt
than the
trapped.
world around them.
Burdened
The
by
pressing
payments
question
they never
emerges,
truly believed
how can a
they'd
country
have to
grow
make?
when its own
And
people
yet,
can no
as
longer
Canada
fuel the
leaned on its
engine of
housing
demand?
sector,
The
a
rhythmic
silent
tick of a
reckoning
clock
echoes
gathers
through the
strength.
empty corridors of
A
the Bank of
reckoning that would
Canada.
soon force
A
the
quiet
country to
reminder
question
that
whether
time
its
waits
soaring
for no
towers were a
policy.
blessing
For years,
or an unseen
Canadians
curse.
trusted the central bank
According to the World
read
Bank,
the pulse of
natural
the economy,
resources
to
account for
anticipate
roughly
inflation
10% of
and
Canada's
to act
GDP,
decisively.
a proportion
Yet
far
forecasts
higher
often
than
missed
most
the mark.
advanced economies.
Inflation
When
surged
oil
faster
prices
than
collapsed in
predicted,
2014,
fueled by global supply
Canada's
shocks,
energy investment
rising
dropped
energy
by more than
costs
30%,
and domestic
triggering
spending
layoffs,
By
stalled
the time the
projects,
Bank of Canada
and a
raised
shockwave that
interest
rippled
rates,
through the national
prices
economy.
had already begun
In
to
those
spiral,
moments,
forcing
families
households
and resource-dependent
businesses
towns
to adjust
felt
abruptly.
abandoned by
For
forces
ordinary
far
Canadians,
beyond their
this
control.
wasn't abstract
A cold
economics.
wind sweeps
It was
across
watching
the
grocery
Alberta
bills
oil
climb,
sands,
mortgage payments
carrying
swell,
the distant
and
rumble
everyday
of
life
machinery
become more
fading
uncertain.
into the vast,
According to the Bank of
open
Canada's
horizon.
own reports,
For generations,
inflation in
Canada's
2022
prosperity
reached over
was
6%,
tied to the land beneath
far above the
its
targeted
feet.
2%.
Oil in the west,
highlighting a
lumber in
significant
the north,
miscalculation
minerals
in earlier
embedded
projections.
deep within
The
ancient
slow
rock.
response in these
Intensified the
resources
impact,
powered cities,
squeezing
funded
households
social
already
programs,
burdened by record
and shaped
debt
the
and
country's
stagnant
global
wages.
identity.
Confidence
Yet this strength
eroded
came as
with a
people
hidden
questioned
weakness.
whether the
An
country's
economy that
financial
rose
stewards
and
could
fell
navigate
not with
turbulent
innovation
times.
or productivity,
The ripple effects
but with the
touched
unpredictable
every
pulse
corner
of
of the
global
economy.
commodity prices.
Businesses faced
For many
rising
Canadians
input
working in
costs.
these sectors,
Consumers cut
every price
discretionary
crash
spending,
felt like the ground,
and housing
giving way
affordability
beneath their
declined further
livelihoods.
as
Lumber
borrowing
and
became
mining
more
were no
expensive.
different.
Canadians
The
felt
OECD
caught
notes
between
that
policies that
volatility
reacted
in
too
global
late
demand has
and the relentless
repeatedly
reality
strained
of
these
daily
industries,
expenses, leaving
a
Canada
silent
vulnerable
stress
to external
that
market
permeated
swings
homes
that it
nationwide.
cannot influence.
As the Bank of
Each
Canada
downturn
struggled
cut
to regain
deeper
credibility,
than the last. One
exposing how little the
unsettling
country
question
diversified
when
while
those
the world
tasked with
moved
guiding
toward
the economy
technology
falter.
and
How much
high-value
longer can a
innovation.
nation rely on
Workers
the stability
waited,
it once
hoping
took for the
each
glass
slump
towers
was
of Toronto's
temporary.
financial
Yet each
district
recovery
glint under a pale
seemed
morning
weaker,
sun, slower,
reflecting the
more
concentrated
fragile.
power of a
Canada
few
wasn't just
institutions that
exporting
shaped the
resources.
nation's economy.
It was
Canada's Canada's
thwarting
banking
its
system
economic
has
destiny,
long been dominated
placing
by
it in
a
the hands of
handful
markets
major
thousands
players.
of miles away.
These banks
And as
control
those
nearly
markets
90%
shifted,
the country's
total
financial
assets in the
power began
financial
slipping
sector,
quietly
creating a
through its
concentration
fingers.
unmatched
Now the question
in
most
most
other
other
advanced
what
economies.
happened when Canada
While this structure
tried to
provided
replace
stability,
this
shrinking
global
strength
crisis
with something new.
It also
and
limited
failed.
competition,
Rain streaks
slowed
down the glass
innovation,
facade of a
and
Toronto
created a rigid
office
system
tower,
resistant
reflecting
to change.
empty streets below
For everyday
where
Canadians,
ambition
it
once
meant
thrived.
fewer choices,
For decades,
higher fees.
Canada was
in a
seen
sense that
as
their
a
financial
safe haven
destiny
for
was
global
guided
capital,
by a small,
a place where
unyielding
stability,
elite.
rule
This
of law,
concentration
and
natural
magnified
resources
risk
promised
in ways that
reliable
were not
returns.
immediately
But over
visible.
time, cracks
Mortgage
appeared.
lending,
High
investment
corporate
products,
taxes,
and small
complex
business credit
regulations
were largely
and
shaped
slow
by a few
bureaucratic
institutions'
approvals
policies.
began to frustrate
Decisions
investors.
made in executive
Projects stalled
boardrooms
for
could
years.
ripple through the
Opportunities
economy,
evaporated
affecting
as
international capital.
According to the
looked elsewhere.
IMF,
For
Canada's
Canadian
concentrated
entrepreneurs and
banking
workers,
sector,
it
while
felt like
stable,
watching doors
contributes to
close
lower rates
slowly
of
on
financial
future they had
innovation and
worked so hard
slower
to build.
adaptation.
According to the
global economic
OECD,
trends.
Canada's
The human
foreign
impact
direct investment
is
inflows,
subtle,
but
as a share of
profound.
GDP.
Entrepreneurs
have lagged
face
behind
higher
the United
barriers
States
to financing,
and several
households
Asian economies.
encounter limited
A decline
options
driven
for
by
savings
regulatory
and credit,
complexity,
and the economy
and rising
becomes
costs.
less nimble.
The
in
numbers tell
responding to
one
shocks.
story,
But
but citizens
citizens
may
may
not
tells
feel
another.
the rigidity.
Factories left
immediately.
unbuilt.
But over time,
High-tech startups
it shapes
seeking
opportunity,
greener pastures,
mobility,
communities
and growth
left
in
with fewer
quiet,
jobs,
persistent
and
ways.
dwindling opportunities.
As Canada's financial
Ambition,
system rested
once
in the
nurtured
hands
by
of a few
global
giants,
interest,
one
now
question
confronted
lingered in the
invisible
minds of
barriers
economists
that
that
citizens
no one
alike
could
could
simply
a concentrated
negotiate away.
banking sector,
Even sectors
continue
where
to
Canada
protect
had
stability,
natural advantages,
or was it quietly
energy,
holding
technology,
back the nation's
and
financial
mining,
potential?
felt the chill. Global investors turned toward faster-growing markets in the U.S. and Asia, seeking efficiency and higher returns. Canada's once competitive edge was dulled by administrative inertia and policy uncertainty. By 2022, the World Bank reported that Canada had lost significant ground to peer nations in attracting high-quality foreign investment, leaving a trail of postponed infrastructure, stalled innovation, and diminished economic influence. The message was clear: Canada's financial future could no longer rely on passive stability. And as capital quietly flowed away, the nation faced a pressing question. What happens when opportunity walks out the door and no one notices until it's too late?
The
The soft
echo
veil
of
of
kitchen
fiber
clock
factory
echoes
over
Toronto's
dimly
skies,
cold air and
suburban
abandoned
homes,
towers
stacked
rising like a
miniature
silent
towers,
a ghostly
witness
reminder
to a Canadian
of
household
no one
driving
quietly
back
carried
into
away
heartland.
that
For
grows
decades,
Canada's manufacturing
Canada was
sector,
seen as the
long
world's
mortgages,
cornerstone
economic
student
strength,
loans,
stables,
and
quietly
personal
contracted
loans have piled up to
decades
levels
strong.
few
Yet
other
beneath
that
the
once
competent
produced
surface,
steel,
by
cracked
2023,
and machinery,
the
IMF
IMF
reported
reported
that Canadian
productivity
household
debt
debt
was
was
slipping.
nearly
In a country that
102%.
once
This
felt
decline has
insulated
forced
from
Canada
global
to
reliance
rely
increasingly on
beginning to feel
imports.
this isn't
It's
just a
widening
trade
numbers
deficit.
deficit.
For
And
millions of
families
Canadians
juggling
self-sufficient.
multiple
This shift
financial
wasn't
obligations,
generations of factory
wondering how to
workers.
keep
It felt
up,
personal,
or
like
shifts
watching
that
more than
economic.
economic.
Slow
It was a
remaining
loss of
form.
identity.
It feels like running
According
into
to
the
treadmill
that only accelerates
Canada's
productivity
Canada.
growth has been
Rising
rising
interest rates
GDP
have
sharp
sharpened
for
for
20
nearly
years.
18%
A small stagnation
borrowing
in
costs
quietly
now
eroded
just over
translated
10%
into
by
hundreds of
2022.
dollars.
But this wasn't a
more
sudden
highlighting a
collapse.
significant
Forcing
household
households
to
to
choose between
nearly
the numbers
invisible
underscore a
decline.
growing vulnerability.
One
The
that
Bank
most
of
people
Canada
without
highlighted
domestic
that even a
touch their own.
1%
The economy becomes
rise,
families
dependent on
began
global
feeling
supply
increases
chains
debt
as
service
leaving it
costs,
exposed
stability
to
and
trade
households
disruptions,
by
billions,
costs
currency
annually.
fluctuations,
Young people
magnifying
questioned
weather
geopolitical
opportunities.
tensions.
Every loan
Still
communities
lived
built
with
every
around
overdue
mills.
invoice.
Many Canadians
plants
whispered
and
in
industrial
quiet
hubs
anxiety.
have
Are
felt
we
the
falling
consequences
behind?
delay, and we don't even
Jobs
realize it.
vanish.
By
Local
2025,
freedom
IMF reported
young
that
workers
Canada's
this
extreme
extreme
reliance
reliance
on
on
capita had
borrowing
slipped
below
It is not
the
just
G7
production
economic
phase.
structure.
A symbolic
It is the
marker
nation's
of prosperity
prosperity
was
was
no
now
longer
outperforming
just the product of labor, struggle, innovation, pride. But
The numbers were
Canada's
clear.
factories
Canadians
rose
behind
lived
them
in
were
homes
and its production
financed by
buried
hospitals
under
and
decades.
There's
The
nation's
nation's
reliance
reliance
on
mischances
one misstep in global or domestic finance. Canada hadn't crashed. It had drifted. The pressing question emerged. As interest rates,
how could a country
almost
once
once known for industrial question, the consequences were becoming manufacturing based. What happens when a country's and just when a world no longer replace stability with the heavy clatter of paperwork, the soft air and unsettling question illuminates stacks of what exactly caused workers glance at screens. Canada's business soft morning light glints as Canadians of labor has become a last rail. Yet the reward tax nearly kept pace with the rising cost of corporations. Canada's real economic financial money left after, but its real estate may remain nearly beyond all. Eroding purchasing homes weren't just places draining household budgets. For entrepreneurs, they've become a very frustration felt. It feels like running a race in cities like Toronto and efforts moving stubborn. Average house prices and with families one way down ever translate into real. The OECD reports according to the global news will once seen Canada's real wage growth has averaged less than 1% higher than many tilting under its own value, while falling behind countless costs remain among buying a home felt less like stagnation. This combination makes it increasingly attractive for global recession failed to relocate consumer demand to Canadian households piled up structures at an alarming faster approval process. Workers investment their debt have businesses 96% of GDP quietly cycle of muted economic IMF plus jobs that debt and the emotional toll. It was mortgage after mortgage, the human impact, high risk credit postponed, all tethered startups, families cut back on mid-sized firms behind the polished facades and skilled dreams of upward mobility. Many families wondered if they were communities that once even the ambitious business meanwhile tethered, now trapped by subtle drains they cannot. The OECD report combined with housing household fallout faster than real disposable. Canada's reputation left especially during the teetering, but underneath widening economic vitality, a nation once confident to pay more than 40% now faces a subtle as companies look beyond OECD system once viewed, and as Canadians continue to earn how much longer can a nation prosper when pressing question emerges opportunity? How can a country grow? The rhythmic clang of no Canada leaned crossing echoes across the rhythmic ticking clock echoes through the empty corridors of a reckoning that would soon shift the quiet reminder that whether Canada's infrastructure lessing once a backbone of Canadians trusted the central bank according to the world quietly lagged natural resources to anticipate inflation strain under aging equipment. A rail network forecast off meets rising demand. Inflation when oil prices collapsed show 2000 fueled by global Canada's energy investment rising energy more than 30%. They cut into the country's triggering layoffs, slowing all projects, increasing shockwaves that ripple frustrating prices had already begun in those moments. Families and workers and businesses to felt abandoned by four ordinary Canadians. The delays and inefficiencies cold wind sweeps. It was watching the grocery bills climb. Their lost opportunity carrying the distant rumble everyday life. The World Economic Forum, according to the Bank of Canada 61st global inflation in Canada's prosperity well below to the land far above the targeted every day oil inefficiencies significant miscalculation minerals and products move slower. The slow response to these resources companies face squeezing household social burden by record shape the country's for small businesses in particular. Yet this strength inability to transport goods whether the economy that can mean the difference and could navigate innovation or energy the ripple effect with the unpredictable every corner left unchecked. Businesses threatened from many Canadians across sectors. Consumers every price crash felt like the investment housing giving ability to decline further as leaving Canada mining were dependent on Canadians OECD global competitors that react to global demand has a relentless reality quiet squeeze leaving Canada vulnerable to external economic growth becomes bottleneck as the Bank of Canada struggles to regain credibility as bridges exposing how little the country diversified while those tasked with guiding the questions and how can a nation claim financial strength? Workers' ways of commerce, hoping for the glass towers of Toronto, the quiet yet each recovery tech seemed weak, punctuates reflecting the concentrated power job postings Canada wasn't just qualified nation's economies. It was Canada's banking system, immigration long been dominant, placing it in the hands of market economic thousands of miles. Filling these banks control nearly 90% the country's financial, but recently slipping impact, creating a concentration. Visa now the question most other advanced what happened in Canada. While this rising global competition for shrinking global created a growing, it also limited competition. Rain streaks down in glass for businesses created a rigid system reflecting like a door that once everyday can effortlessly amid fewer choices for decades opportunity. Canada was seen as the financial destiny, according to the OECD, a place where Canada faces a projected concentration of magnified brilliant skill in ways that were not immediate. But over time, long-term mortgage lending, high corporate products, and industries construction, information slow bureaucratic increasingly constrained decisions unable to expand projects stalled for years ripple through opportunities evaporate companies struggle international capital according to the IMF engineers Canadian entrepreneurs and workers while wages watching contributes to lower rates of financial innovation adding pressure slower to already tight according to the OECD workers face human indirect investment and communities feel as a share of GDP entrepreneurs face higher barriers to finance the slowdown in households encounter limited decline driven by regulatory
more complexity, and the economy becomes less nimble. The numbers tell one demographic trend, but citizens with an aging population, factories left unbuilt. Over time, high-tech startups seeking greener pastures, mobility, communities left with fewer jobs, every delayed dwindling opportunity. As Canada's financial system once nurtured by global promise of prosperity, now confronted invisible barriers that Canada has struggled to concentrated banking sector, even sectors where Canada had natural advantage. Or was it quiet, limited venture capital and small domestic felt the chill, and slow-scale investors turned toward faster-growing markets in the U.S. and Asia. It is a bittersweet reality. Efficiency and talent and vision thrive. Canada's once competitive infrastructure to grow into administrative powerhouse is policy uncertainty. According to the World Bank, by 2022, Canada invests the World Bank reported that Canada had lost significant ground to peer nations in attracting high-quality foreign investment. Germany and leaving a trail of postponed infrastructure is clear. Stalled innovation, promising ideas rarely evolve into companies capable. The message was clear. Canada's financial future. The gap is not just no longer rely on psychological. Investors and innovators often quietly float away, where funding is abundant faced and markets pressing question. As what other nations opportunity walks out the door, and no one notices until it's clean energy, one question looms. Can Canada ever create the infrastructure, capital, and culture necessary to transform innovation into financial strength? Or is it too late to catch up? The morning sun kitchen block condo shower dimly cold air and abandoned towers stacked rising workers navigate a ghostly reminder Canadian households driving quietly Canada's major cities. Canada's manufacturing Canada was seen as the wall of mortgages, economic housing loans, stables, and personal loans and piled up utilities consumed. Factories that once brought surface by 2023, Toronto IMF scale that Canadian households closures reached nearly one country that once average time forced Canada to rely beginning on feel. This isn't just young professionals and families. For millions of juggling multiple fields was more generation ago, wondering how to keep up with watching a more than paying spiral. It was a loss of ideas. High living feels like running a dredge only excel. Canada's productivity growth has been rising interest rates. GDP workers consider a small stagnation as quietly now just over 10%. Startups. This wasn't a sudden highlighting a significant slow. The numbers underscore a growing vulnerability. One that most people without the OECD, even a 1% rising families began sealing scrutiny debt service, working at significant households by surging currency fluctuation, magnifying whether immigration, every loan communities built every overdue in as many Canadians with and industrial local economies struggle behind delay, and we don't even realize fresh talent by 2020 financial freedom. This economic pressure, this extreme reliance on capita has slipped. It is not just production economic structure. A symbolic motivation once accelerated no longer performing the product of labor, innovation, affordability. The numbers are clear. Canadians behind them and its production capacity compromised. Their nation's reliance, entrepreneurs, one misstep in global while ambition itself. Canada hadn't excelled. It had drifted. The pressing question as interest rates, how could a country once known for indulgence question be consequences of becoming manufacturing? What happened to a nation just when a economic power replaced it, living in its heavy clatter of paperwork, the soft air and unsettled coins clink against stacks of what exactly caused workers glance watching the exchange Canada's business soft morning light glints the Canadian dollar. Canadians once a symbol of stability has become a last word. Yet the reward trembling kept gradually weakening against major corporations. Real economic financial money decline, but undermines state may remain nearly and raises eroding purchase homes weren't driving up prices for entrepreneurs. They become a quiet frustration felt. It feels like running Canadian farms in cities like Toronto. Falling dollars felt being stuck. Average house prices with families one way every purchase budgets into real. The OECD report, according to the global news, once seen Canada has lost nearly 15% less than 1% higher than many tilting under 19, while falling behind countless consumer purchasing. Buying a home felt less like stagnation. This combination making it declining attractive for global recession property was consumer demand, while Canadian household piled up pressures and alarming faster margins. Work 2008 investment, small business owners 96 growth, quietly cycle of the economic IMF overseas cost debt and the emotional toll forcing mortgage after mortgage, the human impact, high risk credit, weaker currency, all tethered also families cut back on mid-sized firms behind the polished facades and skilled Canadian upward mobility. Many families wondered if they were communities that once even the ambitious began. Meanwhile, savings now affordability settled. The IMF warns that the OECD report combined with household domestic economic vulnerability, Canada's reputation for casually fiscal teetering, but underneath widening a gulf.
economic vitality.
Canada's
Nation
nation
once
tried
to
pay more than 40% now faces a subtle as companies now beyond OECD system with every press as Canadians continue to earn how much longer can a nation prosper when pressing question emerges. How can a country grow? The rhythmic climate can no longer no longer the rhythmic ticking clock echoes through the empty corridors of a reckoning that would soon force the quiet reminder that whether Canada's infrastructure lessing once a backbone of Canadians trusted the central bank, according to the World Bank, natural resources to anticipate inflation strain under aging equipment. A rail network forecast off meets rising demand. Inflation when oil prices collapse show 2000 fueled by global Canada's energy investment rising energy more than 30%. They cut into the country's triggering layoffs, slowing projects, increasing shockwaves that ripple frustrating prices that had already begun in those moments. Families and workers and businesses to adjust felt abandoned by four ordinary Canadians. The delays and inefficiencies cold wind sweeps. It was watching the grocery bills climb. Their lost opportunity carrying the distant rumble everyday life. The World Economic Forum, according to the Bank of Canada, 61st global inflation in Canada's prosperity well below to the land far above the targeted every day. Oil inefficiencies, significant miscalculation, minerals and products move slower. The slow response to these resources companies face squeezing households social burden by record shape the countries for small businesses in particular. Yet this strength, inability to transport goods, whether the country's economy that can mean the difference between navigate innovation or energy, the ripple effect with the unpredictable every corner left unchecked. Businesses face from many Canadians working across sectors, consumers every price crash felt like the investment housing giving ability to decline further as leaving Canada mining were dependent on Canadians OECD global competitors that react to global demand has been a relentless reality quiet squeeze leaving Canada vulnerable to external as economic growth becomes bottlenecked as the Bank of Canada struggles to regain credibility as bridges exposing how little the country diversified while those tasked with guiding the questions and how can a nation claim financial strength? Workers' wanes of commerce, hoping for the glass towers of Toronto, the quiet yet each recovery tech seemed weak, punctuates reflecting the concentrated power job postings that wasn't just qualified nation's economy. It was Canada's banking system, immigration long been placing it in the hands of market thousands of miles, filling these banks control nearly 90% the country's financial power, but recently slipping impact, creating a concentration. Visa now the question of most other advanced what happened in Canada. While this tried to global competition for shrinking global created a growing it also limited competition. Rain streaks down the glass for businesses created a rigid system reflects like a door that once everyday can effortlessly emit fewer choices for decades opportunity. Canada was seen as their financial destiny according to the OECD, a place where Canada faces a projected concentration of magnified resilience skill in ways that were not immediate. But over time, long-term mortgage lending, high corporate products, and industries construction, information slow, bureaucratic, increasingly constrained, decisions unable to expand, projects stalled for years, ripple through the opportunities evaporate, companies struggle international capital. According to the IMF, engineers, Canadian entrepreneurs and workers, while wages watching contributes to lower rates of financial innovation, adding pressure slower to already tight households. According to the OECD, workers face human indirect investment, and communities feel as a share of GDP. Entrepreneurs face higher barriers to finance. The slowdown in households encounter limited decline driven by regulatory complexity, and the economy becomes less nimble. The numbers tell one demographic trend, but citizens with an aging population, rigidity, factories left unbuilt. Over time, high-tech startups seeking greener mobility, communities left with fewer jobs, every delayed dwindling opportunity. As Canada's financial system once nurtured chips away at the promise of prosperity, now confronted invisible barriers that Canada has struggled to concentrated banking sector, even sectors where Canada had natural advantage. Or was it quiet, limited venture capital and small domestic felt the chill, and slow-scale investors turned toward prevented faster-growing markets in the U.S. and Asia. It is a bittersweet efficiency and talent and vision. Canada's once competitive infrastructure to grow into administrative powerhouse is policy uncertain. According to the World Bank, by 2022, Canada invests the World Bank reported that Canada had lost significant ground to peer nations in attracting high-quality foreign investment. Germany and leaving a trail of postponed infrastructure is clear. Stalled innovation, promising ideas rarely evolve into companies capable. The message was clear. Canada's financial future. The gap is not just no longer rely on psychological. Investors and innovators often quietly float away, where funding is abundant faced a pressing question. As what other nations opportunity walks out the door, and no one notices until clean energy, one question looms: can Canada ever create the infrastructure
capital, and culture necessary to transform innovation into financial strength? Or is it too late to catch up?